All right, folks, good evening. So I'm trying another color scheme. This one feels kind of comfortable in my eyes. It may not suit all of you, obviously, but I'm trying to find a happy medium. Okay. So at least you know I'm trying. But actually, I kind of like this one. This one feels good. But if you know how to make this over here darker, like these little identifying things here, I don't know how to find that in TradingView to make it darker. That's the only thing about this I don't particularly like, but I like everything else. So you can see the wicks and you can see the separations of the candles and such. So unless this starts to irritate me, which I don't want to say it won't, because then I'll end up jinxing it, but it feels pretty comfortable looking at this. So anyway, I'll go through this rather briefly, so that way we're not tying up your time because you have to download videos still. Dollar index daily chart. We finally got below that swing low inside this imbalance in here. Any acceleration on the downside takes us below sell side here. And if it gets extremely overzealous on the downside, we have this pool of liquidity here that is, in my opinion, too clean, but it doesn't mean it's got to go down there right now. I'm not trying to pick the top, but we have to see how we trade now that we pierced this. Do we trade back above? What makes us bullish again? It needs to trade back above this candle's high. Change in the state of delivery was bearish. So if we take out a candle that is bullish with an up close, that would set the stage for a potential run up into at least here. And if it fails, then obviously we got our level up for over here. But meanwhile, I'm just looking at trying not to pick a top. So we're basically observing, seeing how it trades tonight. All right, I know this is scrunched up. I just want to make sure you could see the buy side imbalance, sell side inefficiency. We worked up into that. Body's respecting that, as mentioned last week. And today we opened up kind of like close to the low and just fell out of bed. Came back, bumped the old low over here, and worked towards this low. This small little movement in here, I was utilizing that as my barometer for the E-mini S&P today. So here's that consolidation in here. It just broke down, immediate rebalance, sends it lower, hits the old low, and this movement right in here is all I was looking at for the small little upside movement on E-mini S&P. And just real quiet. Euro dollar, wouldn't you know it? We had a nice run up into our objective. We took out the buy side, went right to where we were outlining it. Beautiful delivery. I know some of you guys have been looking for something nice to occur in Forex. Voila, there it is. So here we have the run into the premium level. So it hits it perfectly. And now we're going to see if we get the continuation lower on the dollar, or does it need to come back down into this buy side balance, sell side inefficiency. On the upside, we have a little bit of separation in here that it might want to revisit. So that's the next objective in here. This candle's high to this candle's low. But I wanted to keep this in here because this looks so good, doesn't it? Look at that. Okay, and here's the delivery. Boom. Nice little return back into a fair value gap here, there, and working towards that discount low to try to get up to the premium high of that imbalance. These two levels respectively, premium high, discount low. And on the 15-minute time frame, after it hit the level, it just more or less went to sleep. So it's all about playing it by ear now because we have high impact news tomorrow at 8:30. I'm not trying to forecast anything ahead of that because I don't know how they're going to use the data. All right, so British pound versus US dollar daily chart ran up into what looks like the discount low. I got to make sure that touched. It certainly looks like it did. We're going to be looking for a continuation on the upside into the SIBI and then the buy side liquidity here. Do we drop down inside of this little buy side imbalance, low side inefficiency, then run up into it? Could happen. Again, that's the reason why I'm not trying to forecast ahead. All right, so here's that imbalance on, let's see, go back up this real quick. The imbalance is here. Premium high, discount low. And inside that SIBI, we have a smaller SIBI here, which is just above the buy side liquidity. We're resting in here. So we'll see if it wants to trade up into that area here. I like that idea. Do we drop down first to go there? That I don't know. And I'm not trying to pick that or forecast that. You know, folks will be drawing two scenarios. They'll go dribble, dribble down here and then up, or dribble, dribble, dribble up and then down. Like, okay. And neither one of them pan out. I'm basically waiting for tomorrow morning at New York, and there you go. So I'm not going to waste my time and scribble on a chart with two scenarios that probably won't even pan out. So we wait for the algorithm to set up the liquidity pool, the framework, and then we incorporate time of day. So with the calendar events tomorrow morning around 8:30 or so, and that's what we're waiting for. 15-minute time frame. It looks like it just fell short, doesn't it? Yeah, it did. So, okay, not bad. We still have the likelihood of getting up into that, but it's more or less been straight sideways, really. Nothing terribly exciting about the pound dollar, but I do think it's going to go up in that range here. Brings us to E-mini S&P. June contract, 2022. Daily chart. Lightly shaded area in here. That's this fair value gap there. We traded up into consequent encouragement of that today. And we're here. Now, again, think, folks, think. I am not trying to pick the bottom. If we rally from here and we get above the fair value gap here, okay, if we're north of this level, that takes us into this area here. But until then, we have to at least give the consideration to this maybe making another attempt to go lower to take out like a low, lower low, and then a lower low. Okay. I'm not suggesting it's going to do that yet. I'm waiting until tomorrow morning. I'm letting it do whatever it wants to do. I don't care if I miss a move. I'm relying on the data that the market's going to release and what the framework and structure looks like at the time. So 8:30 tomorrow morning should be interesting. Okay, inside that shaded area and daily chart, fair value gap, we have on the upper portions, notice this, here is the equilibrium of that imbalance. Premium high, discount low. And what I'm saying here, let me go back up. Premium high, discount low, midpoint. Okay. Premium high, discount low, equilibrium. And above that, look what we have. Another imbalance. We traded up into that today. Okay. As we were working towards that level, I was trying to time a tweet that would punch up into this level here and be done. Where you can see I tweeted pay the trader. It just stagnated a little bit around there and then dropped, which was, I guess, good in a way, but ended up sweeping that level once, twice, 3 times, 4 times, and then they closed it here. And then look what they did with it here at 6 o'clock Eastern time. Gapped it down. This is why day trading index futures is the better way of doing it. Okay. Holding with gap risk is stupid. It's stupid. Okay. You want to get in, get your pound of flesh, and move to the sidelines. All right, here's Sunday's gap in here. And overnight, we had this little bit of a drop in here. I ended up selling above the old high over here. And we were inside the lighter shaded area. So that was enough for me to get in there, buy side at a premium, at a higher time frame order flow area of likelihood that this would go lower, attacking the sell side liquidity pools. Maybe it would have gone all the way down to Sunday's gap opening. Who cares? Because we didn't have the economic calendar on our side with any data coming out. I figured it was going to be a consolidation. At 9:30, we dropped down. We saw that happen. I did a live stream on YouTube today, and I mapped out how using the bullishness and a return back in, we could send it up into here. And we got that. So it was nice to see that. And on a 5-minute chart, you can see how we dropped down into the opening gap on Sunday at 10 o'clock or so. The market rallies, creates a small little fair value gap in here, drops down. There's your buy, relative equal highs, and the level I outlined beforehand. It rallied up, came back down into old order flow. Go back and watch the recording I did on the live stream today. And then it rallies again. Institutional order flow entry drill. Rallies. Fair value gap, order block, trades down into it, then runs the liquidity. Breaks, fair value gap. Swing low, taken. Sells off into an imbalance. Fills it. The reaction down here, look at the shaded area. That's that daily discount low. Okay. Accumulates once more, takes out the short-term high. That's enough. And everything else becomes 50-50. And look at that. So say you were holding on to it, expecting to keep going higher. And they did that to you. And then sunk it down 20 more handles plus. Not fun, folks. Not fun at all. So think about where they took it. The origin of where I was outlining the turn. And it went right back down into it there. I'm telling you, folks, if I make a point of getting out here and basically saying, okay, I'm going to hypothetically enter here and put a stop at this level here and a target here, what do you think is going to happen with 200 and some thousand people watching me? And who knows how many people, are really watching me outside of, on Twitter. Like, there's a lot of people. So if I say where my stop is going to be, they're going to do what? The same thing. So that means there's going to be a huge pool of liquidity wherever I say my stop is. Now, if you're in charge of the market and you control price, what are you going to do? These people are never going to get it. They're never going to understand why I'm not going to stand out in front of everyone and do that. They're not. It isn't. First of all, it is doomed for manipulation. It's absolutely going to happen like that. It absolutely would. I know I would. If I was making the market, I'd be waiting around for somebody. Yeah, tell me where you're going to put your stop at with a large following. Because I know, give it 20 minutes, everybody be in there doing the same thing. And then there it is. You got your liquidity. Bang. Runs it out. They'll kill two birds with one stone. They'll make it look like the concepts don't work and run out real liquidity. That'd be fun. I would do it. I mean, it's mean-spirited in a way, but if that's your job, who would deny themselves the self-indulgence of doing that? I mean, it's your business, right? That's what you're doing. So they got a taste of it today. And you can see some of them on Twitter like, oh, I want to see you give me the entry, the stop, and the target. Man, you figure it out, okay? If I point to it, they got a taste of it intraday, like what I do, what you hear on the Monday, Wednesday, and weekend commentary. I'm pointing to where it should go. If you can't find yourself in the trade, you got to keep practicing and studying. And that's just the way it is. Because I'm not going to go out there and put a bullseye on me and say, here I am, and here everybody is behind me, because wherever I say I'm going to be, everybody's going to be doing the same thing. They're going to do the same thing. So that's just, that's dumb. That's the stupidest thing in the world to do. So, anyway, I'll continue to give them examples or such, pointing to where it's going to go. So we'll see what we get tomorrow at 8:30 when the news embargo lifts, and maybe we'll get something we can outline in live session. Okay, and I think that's going to be it for this one. I'll touch base with you on midweek commentary. Until then, be safe.